Hey, Dan Passarelli here. Well, the volatility has continued in an interesting fashion, and I want you to take a look at something on the S&P 500 chart. So this is our daily candles. Now, if you notice, today we had what is called a hammer candle. It's a doji that has a strong, big lower wick to the downside. Now, hammer candles tend to follow a decline in the market, and they can indicate a reversal in that decline, leading to a bullish move. And basically the idea is that sellers tried to push it down during the day here, but the buyers had control and it opened pretty close to where it closed, so the sellers didn't gain any ground. But what's interesting about it is that it still ended up closing below the 50-day moving average, which, as we all know, is a strong support or resistance level, at this point a resistance level. So we're getting these two sort of contrary signals that one is kind of bullish and one is kind of bearish. Now, one of the things that I always like to do is to take a look at the RSI, and I'm going to pull that up right now. And that is a very inconclusive RSI. It's about as inconclusive as it can get, being here at 48.86. There's no divergences to read or anything like that. So I think tomorrow can be a pretty pivotal day. If we break through the 50-day moving average and get a confirmation candle on that hammer candle, we could have some volatility following through to the upside, and if not, we're pretty likely to have some volatility to the downside. And this is going to continue, of course, until next Wednesday, where there's more of an expectation for a 25 basis point cut, but there is still some expectation for a 50 basis point cut. So that's the news I have for today. This is Dan Passarelli, Trade Smart.